here for the party. Trust me, we just getting started. The sound, the vibe, I feel so alive. I'm only here for the party. Trust me, we just getting started. The sound, the vibe, big bass, that's where the heart is. I'm only here for
Yo, 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 it's your boy Mind Dialogue back once again, sharing info for you to comprehend. And before you know it, you'll start to ascend. So we're back for another episode, Dialoguers. And I wanted to give you an update. I did not get a chance to share where we are in gold currently. And so I just wanted to fill you in and then also give you an introduction to Bitcoin, just starting, like a pretty quick analysis and show you the paper trade that I am attempting to enter. So as you can see, I'm currently on the 4-hour time frame right now. And, if you remember from the last gold video, one of the things that I shared is, as we were descending down along this channel here, I said that we might actually get an opportunity to finally dip into this bearish fair value gap that was created over here. Let me go ahead and highlight it right here. This bearish fair value gap that was created, and use it as an inversion fair value gap. So what that essentially means is I thought we were going to use this area opposite of what it's typically used for. So with a bearish fair value gap, the way it's supposed to typically behave is once price action is underneath it, we're supposed to come up and dig up inside of it, almost like hitting a ceiling, and then reject to continue down, right? But initially I thought that we were going to use it earlier, but we broke through, came down, and hit this very important and critical trend line yet once again. This is the same trend line we probably hit minimum probably like 12, 13 times, and is also responsible for sending gold up to its all-time highs that it made back in towards the end of April. And so we broke through, came back up, and as we neared the corner of this wedge that was created by the top of the trend line channel, or the top of the channel, the trend line that serves as the ceiling essentially, and the bottom trend, that very critical bottom trend line from way back, we started going towards the corner here, but we didn't get all the way there. So came back and I was like, you know what? I feel like we're going to finally use this bearish fair value gap as support. At the time when we were talking about it, price action was right on this red candle right here. And I went down to a lower time frame and saw that we already started getting support from it. And look what kind of move we got once price balanced out right here. Like this is a massive pop-up move right here. Like you couldn't have asked for like a better aggressive move or a better aggressive entry right here. And we, as I thought we would do, we broke up outside of the channel, made a high. That was a nice trade right there. Getting an entry going up here, that's probably like a good 3 to 5 racks. I think it was the low we made 33.37 up to, what's that, 33.68. So just about 30 points, 31 points. It's a nice move right there. Anywhere from 2 to 5 racks. I don't know the actual amount, but that's what my estimate is. And so we broke above the we broke up above outside of the channel, and now we're coming back down, and we'll potentially be using this bullish fair value gap in its intended way, right? This was created from back right here. And so it looks like we're going to come and dig down into here. We could potentially come lower. We can come like down here at the beginning of this bearish fair value gap that was created right here. Right? So let me highlight that as well. I'll probably make it another color. Let's see here. Let's make it a little darker. Right there. So we might come in that area. We might hit the top of this, which would coincide with the top of this channel trend line. And it may potentially give us the fuel we need to finally break above this and address the sore thumb of a wick that has been sitting here. It was created, I believe, I think some big players and institutions or market makers came into. My bad, y'all. I got my. It's the weekend. My baby's staying up late. Coming in, disturbing me. It's the weekend. They staying up late, but they getting ready to go to bed. But they keep popping in on me. But nonetheless, I think we will probably end up addressing. I think this is when the market makers came into the market here, because from the 4 hour down to like the 1 hour, you see this is a green candle, or is the majority of the trading and investing that took place within this candle was buying. Then when you start getting below the hourly time frame, it's a sell candle, meaning it looks like there were more sellers that came in. But because the higher time frames reign supreme, I think it's them coming into the market aggressively, right? And then selling it down to free up. I think they sold it down aggressively after coming in aggressively, right? These are very like impulsive type moves to mess people's psyche up, and some people might want to jump in right away because they don't want to miss out on either the move up or down. So I think they came into the market. Then when they came in real quick, they sold off real quick, right? This whole wick is them selling to close down here at the top. And by them selling so much, coming back down from this high, they freed up a lot of supply. Because they freed up a lot of that supply and it created the selling pressure, other people started joining in, most likely created the snowball effect where you got all the selling volume that took place, and it just added on to one another until we got back down to this critical trend line yet once again. All these people were selling, right? So there's a bunch of supply that's now on the market. And then that gives the institutions that came in, because remember, this candle, the candle opened, they sold down to manipulate, and then they went up really aggressively. So they went all the way from this low down here at 33.26 all the way up to this high of 33.85. So they essentially cleared almost 60 points in 4 hours in this one candle, right? So they came in aggressively, sold it down aggressively, closed here, freed up a lot of that supply, created a snowball effect, sold it all the way down here. A bunch of supplies on the market now. That gives them the ability to buy up all of that supply, because remember what I told you, institutions just can't get in every time they want to. They have to engineer liquidity or the supply and demand that's in the market, because their orders are so big and they're playing with so much money. They can't just come in on one fell swoop like that. They have to engineer liquidity. That's where we get all the fluctuations from, right? So they were able to engineer all the supply to get on the market. Then once all that supply was available, They then bought it back up, created that demand, and then the snowball effect essentially, except going up, even though that's kind of like an oxymoron, right? Because snow won't really go up a mountain. But in essence, the kind of that idea where they created a lot of demand and they were able to buy up, people were following, then we started going up, and now they probably were able to get back in their position to go up, because I think they truly remember from in the past, this first level here at this 3409, this is where I really think they want to go. I ultimately think they really want to get all the way back up here. Let's see how high this is. I think they want to get back up here to hit this trend line up here. So that's probably around 3460. And then we might get a really hard sell down after that. See how much time we got. Perfect, 20 minutes. So that's what I think is going on right now. And so you see these two red trend lines here. This is a whole nother wedge, that orange space there in the right corner that I have shaded. We're approaching that area, and then we're going to get ready to either break out to the upside or to the downside based on what they're doing. I feel like they want to break out to the upside. Now, the indicator wedge, the wedge indicator that I have, they don't really show a flag yet, but to me, in my eyes, in all honesty, this looks like a bull flag to me. So you see how we created this channel here where price action was ping-ponging inside, on the inside, on the top and bottom. This actually looks like a bull flag to me. So let me get the path tool and look here. So this is the pole of the flag, right? And then you have essentially the actual flag right here. And look at this. See this? That's a flag. Look at that bull flag. So I think we're getting ready to go up. That's a clear bull flag right there, right? If we were to shade that area, like, you can't tell me that's not a flag. I don't care if the indicator didn't pick it up. That's a clear flag. Watch this. Let's shade it. It's not the most perfect, but that's a flag right there. So I think we're getting ready to end. And look what happened now. We did the zigzag to create the flag, which is what they typically do. And then they came down right here to get support right at this point of the flag right here, which is what they typically do before takeoff. So I'm interested in seeing what price action does. And the candle that they came in on that left that nasty wick, look how the candle closed perfectly. The body of the candle, look how it closed perfectly inside of that channel. This stuff is not by happenstance, folks. This stuff is very algorithmic and coded, and so you just got to pay attention to the details and see, try to detect what's going on and see if you can get a higher probability setup. So that's what I think is going on with gold right now. Now, let's switch gears for a moment and go over to Bitcoin. So I'm on the 1 hour on Bitcoin, right? And Bitcoin, Bitcoin has been going nuts, like crazy. I think when we went down to like in the 70s, I believe the last time we went down there, I think that was as low as they wanted to go before we did this beautiful run up that we're currently in right now. Again, Bitcoin is up at all-time highs as well. And so I'm not going to do like the full long-term analysis right now because we don't have that much time. I'll leave that for another day where we kind of look at on the monthly, even a yearly time frame, and then kind of look at Bitcoin's inception when we got started and what price action looked like. So kind of like what we did with gold, what we did with SoFi, to really create that bigger picture context of what's going on and why we are where we're at currently. So, but I just did a quick analysis because I wanted to see if there was a trade I wanted to take. So I saw that we created a couple reference points. So we got a reference point right there, and we have a second hit here. So that created our reference point. And then look what happened after. As a result, we get a nice wick right, into this trend line. We got these two reference points, and now we extended it, and look how price behaved when it came back to that trend line. That lets us know it's a legit trend line because they're respecting it currently, right? There's a key inefficiency sitting up here. They dipped into it slightly, barely a little bit from before, but I feel like we want to come back up in there. We're going inside of this wedge here again, right? You notice this seems kind of to be like this ongoing theme where price is gravitating inside of some type of channel or wedge, and so that's where we're going. And so what we can expect again is some type of breakout either to the upside or downside. Based on some of what I was looking at, kind of looked like we wanted to come down to get some more fuel. When I put on the ATR versus DTR indicator, they came and hit lower ADR down over here already. I think I found this level. I can't remember, but it was some type of key level, probably the top or bottom of some type of bullish or bearish fair value gap that coincided with the lower ADR range down here. And so I feel like we want to tap into here one more time. If we were to extend the top of this channel that we created to the right, it looks like we can possibly come down here right in alignment with the ADR range and the top of the channel to get a move to go back up, right? Or they could break it to go all the way down. So I feel like we want to tap back up in here. I have an order sitting right up here below upper ADR inside of this inefficiency that coincides with this upper ADR range. And so I'm expecting some type of rejection here. So I have an order sitting right here. So as price gravitates up, it's going to tag me into the trade. If we break above it and goes against what my analysis is, what my analysis is showing, I have a stop loss up here. Now, again, I'm playing with paper money, so the numbers are going to look a little far-fetched and unrealistic unless I was an institution. But regardless of the money, trading is kind of fluid. It's the same in terms of the concepts and price action. The numbers are just the numbers, right? So, you know, I got 1,000 sell limit here. So basically what I want to happen is for them to tag me into the trade, to come back down and to catch profit down here at this lower ADR range. So if they stop me out, I lose a little over $1 million. If the trade works out, I'm getting a little over $3 million. So we got like a 1-to-3 risk to reward ratio there that I'm perfectly comfortable with. It could go a little bit higher, possibly even go up above the trend line some and still sell back down to then come back inside and below the trend line to then go all the way back down. So that's what I'm looking at with Bitcoin right now. You can see we had another channel here where we popped up inside of it and we started kind of zigzagging inside of here, crept on the bottom of it here, popped out of it. We're in like this brief consolidation right now. And so we have open that's right here, and it looks like they're bouncing off of open. So whenever I'm saying bounce or support, this is what I mean, right? If you look, open is right here, and this is what happened on this most recent candle here. It opened at the bottom of it opened right here, then they sold it down. So in real time, it looked like a red full body candle that was just going to take all of this buying liquidity that went up prior, right? And then you got all this buying here that took place from the low here, bought. So there's a lot of liquidity buying volume from here all the way up, in addition to these green candles right here, right? But this open, sold it down here, got support off of the open. Why? Because all that hit open is a wick now. And now we're all the way back up here when it made this high. And then they are getting ready to, they closed already. We're in the process of opening right now. You can't really see it, but the next hour is opening, and look what's happening. You can barely see it, but it's right here. Let me try to highlight it for you. The hour's just opening. the last 10 minutes. But look at that little quaint line right there inside of this red area that I just highlighted. They basically gapped up. So from 118,030.6, they gapped all the way up here to 118,121 point or 123 point or 124.4. So they're gapping up, right? Look at that. So aggressive and so much volume on the hourly that the next candle is opening all the way up here. So they're trying to get somewhere and they're trying to get there fast. So that's what I'm looking at with Bitcoin right now. I do believe we're going up. I could, I can get in a play. I could get in a buy play to take me up here, sell for profit up here right before it gets to them tagging me into the trade to go back down. So I could take the move going up, sell right here, make that profit if it goes in my favor, and then let them wick into here, tag me into the trade to go back down. So let's try it. Let's see what happens. So let's buy 1K to go up, right? And let's go for profit right here, up at 1.2 million. And then we're gonna, let's take a stop loss. Matter of fact, let's take a stop loss below open right here at 224,000. So this is a nice risk to reward. This is like a 1 to 5, 1 to 6 type of risk to reward setup right here. So we'll see. I'll update you and let you know if that ends up panning out. But that's basically what I'm seeing right now. We'll see what happens with the trade. We'll do a more in-depth long-term analysis on Bitcoin so you can really see what took place with Bitcoin and why we are currently where we're at. Obviously, there's other catalysts and news, such as BlackRock, filing and creating that Bitcoin ETF with the SEC before summer last year. And that was one of the catalysts. And then I think in, what was it, like April or May or something like that, we got a halving that took place with Bitcoin. And the halving is essentially every 4 years, Bitcoin goes through this halving process where the supply gets cut by whatever amount. I don't know the exact details and stuff like that. But basically, a certain amount of supply gets taken off the market. And if you know a little bit about Bitcoin, there is only a finite amount of Bitcoin that's ever going to be created, meaning there's a fixed number or fixed supply, and that will never change. And so by default and by nature, Bitcoin, because of that, Bitcoin is a scarce commodity or asset or whatever you want to consider it to be. My bad, y'all. So there's a specific amount of Bitcoin that was ever created. I don't know all the numbers in my head right now, but by nature, it's a scarce commodity because there's only a certain number that will ever be made. And then every 4 years, they go through this halving process where the supply gets reduced. It becomes more difficult every time to create more Bitcoin. And the miners, the individuals who actually help with the production of creating more Bitcoin, it gets even more difficult. That formula, that equation, the process of the computers, it takes a lot more energy and it's a lot more difficult to create Bitcoin because of the halving, because of such a, there's a limited supply. And so that's also part of the reason why Bitcoin is doing what it's doing. So by nature, it was created to essentially behave like this, right? So, but all of that stuff is for another day when you consider like how the dollar's been losing its value, and America is really trying to create the next currency, as we can see, digital currency that will allow them to still reign premier, especially as other countries are trying to shift to some of their own currencies and gold and things like that. America's trying to stay ahead of the game so that as the dollar depreciates, they can still reign supreme and be the primary go-to across the world. So that's pretty much it, folks. I'll give you an update in a later video. I appreciate y'all tapping in. Dialoguers, please like, share, comment, subscribe if you feel so inclined. Remember, you can donate to my Cash App. It could be 50 cents, it could be $1, whatever speaks to your soul. Money sign MINEDIALOGUE for my Cash App. If you want to connect, want some free consulting, thinking about investing in a particular asset class, or whatever the case may be, a specific stock, cryptocurrency, I can help you gain some clarity on what's to come and set up something nice. Email is minddialogue.business@gmail.com. So I appreciate y'all, folks. Have a great rest of your night, and we will tap in soon. Love.